This is a very interesting number to break down for you. $30 billion. $30 billion. Let's take a look at that number because this is what the New York Digital Investment Group, NYDIG, are saying that they think a Bitcoin ETF approval could bring in new demand for BTC. Now, I know what you're thinking. $30 billion isn't all that much money. And yeah, in the grand scheme of things, it's not that money. I mean, come on. Apple just hit $3 trillion. This is like 1% of that, right? It's not that much money. It really, really isn't that much money. This is 3% of NVIDIA. When you realize how little money $30 billion is, it actually becomes a very, in my opinion, realistic sentiment. And this is important because $30 billion buys a lot of Bitcoin. A lot of Bitcoin. Remember, the total market cap of Bitcoin right now is $550 billion or something like that. And there's only about 2.2 million Bitcoin available on exchanges. Now, if you take a price of $30,000 per Bitcoin and, well, how many of those do you get for $30 billion? You get about 1 million Bitcoin. Now, what's interesting there is that's about half the supply currently available on exchanges. Interesting. Because $30 billion, again, is not very much money. That's a fraction of a single percentage point of what BlackRock manages, a fraction of a single percentage point of what Fidelity manages, maybe a couple percent of what Invesco manages, if even. We're not talking about huge, huge numbers here at $30 billion. Again, I know it's a big number for the average person, but when you talk about massive investment funds, the economy, all this stuff, the amount of money sloshing around the equity markets right now, it's not that much. I mean, $30 billion, Apple sneezes and the stock goes up by more than $30 billion. And yet that's all the money that would be required right now to buy about half of all the Bitcoin sitting on exchanges. That's crazy. Bitcoin is a powder keg right now. And these are just US Bitcoin ETFs. You got to remember the big picture right now. Brazil already has an ETF. Canada has an ETF. The EU just got a Bitcoin ETF last week. Australia is applying for a Bitcoin ETF. Australian equity market's about the same size as Canadian equity markets. Now, in Canada, we saw about, top of my head number, about 40,000 Bitcoin going into Canadian Bitcoin ETFs. Might be more, might be less. But let's just take that as a measuring stick here. 40,000 Bitcoin in an equity market that's only 2% of the global equity market. The US is 52 to 54%, so 25 times bigger. So I'm not a math doctor here, but if we take 40,000 times 25, that's a lot of Bitcoin. That's 1 million coins. Interesting. Interesting. If we had the same level of demand from US markets as we had in Canadian markets, the math makes sense. The Bitcoin ETFs could suck up 1 million coins. Keep this in mind too, that Grayscale, a one-way investment vehicle, locked up, 600,000 coins or something like that? People got in knowing they may never get out, or it could be a decade before they get their coins out, but they got their money in anyway. So when we have liquid Bitcoin ETFs, spot ETFs, it could really blow the market wide open. So it's very interesting math I wanted to share with you here. Now, let's dive into Bitcoin, its correlation, and what we see happening right now in the wider market scene. So this is from eCoin Metrics. They say that Bitcoin is now in uncorrelated territory. It's uncorrelated to the NASDAQ. It's uncorrelated to, well, most major things, right? So we can see here, Ethereum very correlated right now with Bitcoin. Bitcoin mining stocks, Marathon, less correlated. Coinbase, less correlated. The S&P 500, it's pretty damn uncorrelated to that, and so on and so forth, right down to the NASDAQ and all that stuff. So Bitcoin, to some extent, is running on its own juice at this point. It's running on its own narrative at this point. Now, that is relevant for what we're going to talk about here moving forward, because we see a lot of back and forth happening in equity markets right now. We still have a situation where people are very bearish and very bullish at the same time. And the current reality of the market is that the S&P 500 is less than 6% under its all-time high. 2023 has been crazy so far already for markets. We're almost back to new all-time highs for the S&P 500. The NASDAQ is looking pretty similar. These are crazy, crazy numbers. The equity market's gone insane. Now, this is largely a tech-led rally. We got to keep that in mind. This has been led by mega tech companies like NVIDIA, Apple, and others, Microsoft, everyone hopping on the AI trend, and that's been really booming. Tech stocks have dramatically outperformed the rest of the S&P 500 index, and the NASDAQ, of course, is a tech-heavy index already. So we're seeing certain companies moving a lot more than others in this market rally, but nevertheless, we've seen a very big market rally driven by tech. Bitcoin, of course, still 57% under its previous all-time high. I feel like it's 2019 all over again, man. Come on. Come on. That's crazy. If you weren't here in 2019, we saw Bitcoin have a nice little rally, got a lot higher than it did so far. We actually got within 30% of the previous all-time high for Bitcoin in 2019. But during 2019, while Bitcoin struggled a lot, the S&P 500 hit a new all-time high like 3 or 4 times that year. Feeling a bit of a deja vu here. Of course, markets never repeat, but they do rhyme a lot, don't they? We are seeing some very bullish analysts coming out here too. Credit Suisse, for whatever that's worth, for their opinion, they're raising their S&P 500 target to 4,700. We see a lot of big banks coming out, raising their targets, saying no one's being bullish enough. The markets are going to go to new all-time highs. I've seen estimates as high as 5,600 for the S&P 500. Keep in mind, right now we're at 4,500. So Credit Suisse's 4,700 target, it's not that crazy. The 5,600 target and others over 5,000 are very, very bullish, let's say. And the equity markets have hit extreme greed, and they've been in extreme greed for a few weeks now. And before we get into this story a little bit more and dive into the other side of the coin and how this could affect, of course, all markets, just a quick note: if you are a trader, you got yourself an account over on BYBIT, is the best place for trading crypto futures contracts, long or short Bitcoin, or you want to trade a wide variety of altcoins on spot markets. Hop in on their super popular copy trading service. You will find a link down below in the description where you can get signed up for BYBIT, get exclusive fee discounts, and also be eligible for up to $30,000 in deposit and trading bonuses. So go check that out if you are a trader. Now let's get back into this. So while we have some calling for new all-time highs for the S&P 500, we have lots of people taking to this side of the bet. So Piper Sandler's strategist, they see a 20% plunge. So the S&P 500 will fall at least 15% to between 36 to 3,800 by the end of the year. Very, very strong amount of differing opinions here. We see as well active managers. This is a fascinating one from Charlie Balelo. He said active managers had less than 20% exposure to equities last October when the S&P 500 was at 3,500. Today, their equity exposure has jumped above 99% with the S&P 500 above 4,500. This is the highest exposure since November 2021. I keep seeing all of these numbers that are as high as they have been since November 2021 for equity markets. Is that a warning sign for equity markets? We're on the eve of some horrible recession and the market's just going crazy. Markets saying we don't care about a recession. And how long can they not care about a recession? And if they do get a recession, is that the point when Bitcoin starts to correlate again? That would just be our luck, wouldn't it? We don't correlate for this massive run in equities where all this hype's going on. And we've had a decent year for crypto. I got to point that out, but we don't correlate for that, right? And we have a situation where when shit starts hitting the fan again, that's when we correlate again and we go down along with, well, the entire ship. Although it'll be interesting to see if we can have our little recession and not have a horrific market crash. Historically, there's not a lot of precedent for that, but it's not the craziest thing in the world either, considering that modern monetary theory, central bank money printing, all the rest of this stuff is largely disconnected reality from markets. This is just in from the Insider paper. They said U.S. leading indicators point to a recession starting soon. That's according to Reuters. Recession coming soon, but we've been hearing recession coming soon for a long time. For a long time. At what point is it just Chicken Little saying the sky is falling? The sky is falling. The recession's coming any day now. We've been talking about an imminent recession for a long time. And technically, the US had a recession Q1, Q2 last year in 2022. But that's not how they count recessions anymore. Now we have a situation where, well, it's a recession when we say it's a recession. And actually, a lot of things have been quite strong this year. Job markets have been too strong. That's why the Fed has kept raising interest rates. And yeah, they broke the banking sector, but jobs stayed strong. Equity markets have stayed surprisingly strong. It's pretty interesting to see how resilient the US economy in particular has been throughout all this mess. So, look, if we get a big stall in the equity markets, I think all eyes then come on Bitcoin is, can we stay decorrelated? That is the question. Because if we can stay relatively uncorrelated, then that could mean we could see a correction in equity markets without Bitcoin tanking. However, there's a real risk that they both go down together. We haven't benefited from the rally, but we could have the side effect of getting the hangover from the equity market party that has been going on. So as Mike McGlone points out here, there may be a bigger issue stalling at about $30,000 amid all the hype about the potential for an ETF launch. You got to consider that we're only at 30K, all this ETF madness going on. And where's my price rally, Bitcoin? I know we're up at 30K, but like, come on, Bitcoin, you can do a bit better than that. We have a seemingly unstoppable stock market, so the Bitcoin pause may signal bigger economic issues, according to Mike McGlone. Interesting thought, nevertheless. And here, the market, the Bitcoin Fear and Greed Index. Look at it. Look at it. It's 50. It's 50. Right there, stuck in the damn middle, isn't it? Every time. Every time. That's how it is. Here we go. Market is pretty much just showing what we're all feeling right now is meh. Meh. Will it, won't it? We don't know. We're all neutral. Everybody hopes for the bullish upside, and I hope that the analysts who are predicting new all-time highs like 150K by the end of the year, that sounds great. I don't agree, but that sounds great. My thoughts and what I've continued to say, and maybe I'll be completely wrong, but this is my opinion, and I will share it anyway because that's what we do here. But I still think we could see that 48K rally for Bitcoin by the end of the year, potentially back down to 30K before the Bitcoin halving. And then post Bitcoin halving, we run up into late 2024, early to mid 2025. We watch the indicators. We see for that Pi cycle top indicator to let us know and other things. You know, the Coinbase apps start trending number one, all that kind of stuff. And then maybe we get to 150K for Bitcoin. Maybe a little bit higher, maybe 180K. We shall see, of course. And then you either sell or you lose all your money again. Up to you guys, of course, what you want to do in that situation. But what's interesting is we are still in a value zone here for Bitcoin. You see, this is the 200-day MA multiplier 2-year multiplier, MA multiplier for Bitcoin. So basically, you see two lines in this chart. You see a red line and a green line. Here's how to really simply understand this chart. When Bitcoin trades under the green line, you buy Bitcoin. When it trades at or above the red line, you consider taking profits. Right now, and for, well, the last year, maybe even a bit longer, we have been trading under the green line, meaning that Bitcoin currently is in a value buy zone. So for the value investors out there who've been dollar cost averaging in through this bear market, those purchases will likely stand the test of time quite well. And I know with dollar cost averaging, you could have been buying from the 69K top all the way down, and you're actually in profits right now because that is the power of dollar cost averaging. But if you had been, for example, buying a little every week, and then when we cross under and start hitting this deeper value zone, add perhaps more per week, you'd be even further ahead. I'm still stacking sats. Let me know if you are still stacking sats as well. Mm-hmm. I also want to share this one with you here. It's from Will Clement. Bitcoin is no longer in a period of capitulation. Bitcoin is no longer in a period of capitulation. So this is the net realized profit and loss adjusted for market cap. You can see we have once again, just barely, with the tiniest bit, we have just entered into the new green cycle. It's been in effect for a few days now. You can see in previous cycles, we had those massive red bear market areas. We exited that probably 4 to 6 weeks ago, something like that. And now we are post capitulation period. So there's a lot of charts, a lot of indicators, a lot of different things that are basically showing the same thing. And of course, everything can be derailed by a US recession, an equity market collapse, and all that stuff. Indicators only tell you so much. You still have to factor in macroeconomics and all that kind of stuff that's going on. But a lot of indicators have been showing that, well, if you've been buying Bitcoin, you've probably been doing pretty okay during all of this time. And keep stacking, basically, because we could be on the verge of something big happening in the market. This is from the Rational Root. This is Bitcoin right on track in the cycle. So this is days until the halving scaled by realized price. So we're about 280 days out from the halving right now. And we can see previously what has the price action done during these times. Right. So we get the cycle bottoms when our cycle bottom this time largely aligned with when previous cycle bottoms came in the cycle, the 4-year cycle for Bitcoin, still maintaining surprising relevance. So what happens over the next 10 months or so while we're waiting for the next Bitcoin halving? Who knows? But we can speculate what happens after the Bitcoin halving because historically we have a lot of evidence for what has happened. Once the Bitcoin halving happens, we have a situation where even if demand stays the same, the price is going to rise because there's only half as much Bitcoin entering the market every single day. For miners, drop from 900 down to 450. Except we're not seeing demand staying the same. We've seen massive stacking over this period by small users. Again, it's such a big number, so I keep sharing it, is that regular retail users are outstripping the daily production with their demand by 3 times. That's not BlackRock, that's not Fidelity, that's not Invesco, that's not any of these other big players, not MicroStrategy. It's none of these guys. It's just regular Joe Blows buying Bitcoin. They have 3 times the daily demand than the miners can currently produce. When all the other institutions come in and they bring the 30 billion bucks in with them, whoa, watch out. Watch out. That's what I got to say. Right now, Bitcoin's under $30,000. Ethereum's under $1,900 at the time of recording, of course. And my guess is that if you fast forward 18 months, late 2024, maybe we talk about early to mid 2025, you're going to start seeing all those posts that, oh, well, I wish I had bought Bitcoin. I would cut my nuts off right now to buy Bitcoin again under $30,000. But that chance will have passed the market by, which is why I have been stacking all year